to do right now is just focus on the US markets, US rates and the dollar, which is essentially the biggest game in town at this point in time. And it's relentless. I mean, relentless. So take a look at this, Ruby. US 10-year rates, that's the US 10-year benchmark bond yield, jumped above 2.6%. It's the first time that has happened since September of 2014. That's point number one. What is, I think, concerning people, right, worrying people, is the short end of the market, 2-year, 5-year, etc., that is steepening at a pretty fast pace. It's catching up. So the 5-year is at 2.09. The reason that is concerning many people, and this is interesting anecdote, the last time the 5-year was at about 2.09 in the US, the US 10-year was 3.23%. We are at about 2.6 now. But last time, the 5-year was where it is now. The 10-year was at about 3.23. The implication being that the rates actually in the US could go a lot higher, push beyond 3, maybe even, you know, like the last time, 3.23 or so. Now, you would kind of, people will ask, well, what's the implication for us here? Should that really worry us in terms of big outflow, etc.? Yeah. Because yields here have fallen, right, to about 6% or so, just over 6%. But there has been enough and plenty talk that yields may actually touch 6%. Say if yields are 6% here, in the US they are about 3%.
Gaps is 300 basis points.
300 basis points. Yeah. And that's the last point I want to make. The average gap between the Indian and the US 10-year has averaged 300 basis points since 1996. So it's not outlandish in a way to think that we will actually get to that 6 and 3% difference. In the Indian context, I think for our viewers, I think, you know, flows will get determined into, I mean, EPFR, for example, which tracks flows for some of the largest funds in the world, said that US equity funds have got $21 billion, mostly through ETFs last week, right? So flows will get determined, and I think you should have your eyes squarely on what's happening to the US rates and the US dollar. Because that will put pressure on emerging markets. India is one of them. But I think you should also remember the nuance that the average has been about 300 basis points, the difference. There are other factors in this mix as well, which I think will be important to remember. But I think, you know, in a more macroeconomic sense, and the fact that the difference has already been 300, it's not crazy to think that we get to that level and all hell will break loose. I don't think one should kind of interpret these numbers in that particular way. So, I mean, that's my piece for today.
All right. On that note, let's just come back.